Welcome to Business Pulse Talk Radio. I'm your host, Michael Brette. We've got an exciting show here today on Business Pulse Talk Radio, the heartbeat of business. We're going to be talking about how to find investors and what to send to them. I know that seems very basic, but you'd be surprised at, again, some of the phone calls that I get, the emails and requests over the years. People just don't know where to look when it comes to finding investors or the right kind of investors, and I'll get into that in a minute, what I mean by that. But let's start talking about how do you find investors. All the previous shows, we've talked about how to structure a private placement, going public with a reverse merger, the costs involved with raising capital. We've talked about those. Now we're going to focus in on how do you find investors. Before the Jobs Act was passed in 2012 that allows companies to advertise, promote, and do seminars, people really had a difficult time trying to locate investors because at that time the SEC rules were you could only solicit capital from people that you had a pre-existing business relationship with. That was the buzzword from the SEC. Now, a pre-existing business relationship is more than just playing golf with somebody. You really had to have past experience with them as far as maybe investments with your company in the past. So it really had to be a strong relationship. A lot of entrepreneurs really don't have that network. They're focused more or less on their company, trying to get it going. They just don't have the investor network beyond the friends and family circle, and that really is limited for a lot of people. Friends and family, they might be able to come up with $100,000, and that's about it. That sounds like a lot of money, but it's not a lot of money to get a business off the ground. So what do you do? Okay, now that you can get out there and interface with people, talk to them, advertise, you can market your offerings. You can get on radio, Business Pulse Radio, for instance. You can get on television, Fox Business TV. You can do your own marketing through the internet. There's just many things that are open to types of businesses, but you have to sit back and say, okay, now, what type of business do I have? Is it a true startup? And what I mean by that is it pre-revenue? You're a startup, you've got an idea, but you really haven't gone to market, you don't have any sales. There are specific angel investors that you can approach for those types of businesses. But the first thing you need to do is do not go out and buy a list of angel investors. Don't go on the internet and look up angel investor websites and get names and just helter-skelter start sending out business plans and information to somebody who you feel is an angel investor. I know that's your first impulse to do, but it's the wrong thing to do. You first have to find out what an angel investor is interested in. The last thing you want to do is send, if your business is a startup in technology, let's say a social media site like Facebook, the last thing you want to do is send information to an angel investor who's only interested in cannabis, or they're only interested in oil and gas. You're just wasting their time and your time, and it shows that you're unprofessional. You haven't done your homework. So the first thing you need to do in locating investors is figure out what type of business you are and what is your history. Are you a startup or a seasoned business? Then find the particular investors who fit the type of business you are. Pre-revenue, post-revenue. Then figure out, are you a public company, planning on going public, or are you a private company? Because there's different investors for public companies and private companies. Are you trying to raise debt or equity capital? Debt capital means you're going to be paying an investor a stated interest rate, either monthly or quarterly or yearly or tacked on at the end of the note that you have. So there's some kind of debt service that has to be going on. Now, if you're a pre-revenue company, you really don't want to do debt because that means where are you going to get the cash flow to debt service the loan? Equity is you're giving up a percentage of ownership in the business. Now, we've talked about valuations in the past. If you're giving up equity, you want to make sure you have the proper valuation so you're not giving away too much equity in the beginning, because the first round of financing that you're doing is usually the most expensive. So you want to have a proper valuation when you're going out looking for investment capital. So now that you determine what type of business you are, and if you're doing debt or equity, you can focus in on how you want to attract investors. Again, going to conferences. You can go on the internet and you can see what conferences are in California, New York, Las Vegas, and if they're specific to your particular business. You can go to those conferences, either be an exhibitor, have a booth, or you can go and just network with different investors. But always have your information at hand. You can also do road shows to reach out to investors. Now, what do I mean by road shows? We do a lot of road shows across the country where we'll bring in 25 investment banks and brokers and private capital firms so that a client company can make a presentation. And the investment banks and the brokers that we invite are specific to that business. And again, if it's a social media type company like Facebook, the investors that we bring into the meetings are specific to that business sector. So that the client is talking to investors that are interested in their project or their type of business. Now, there are also funding platforms out there. Microventures is one that I have used in the past. Microventures is still, you need to have all the paperwork that we've talked about on other shows. If you're doing equity crowdfunding or a private placement under 506C, you need to have your documentation. But after you have all the documentation, you have your videos, you have your business concept and business plan and everything like that, you upload that information to Microventures. Microventures is a broker-dealer platform that will put your information out there for investors to take a look at. They'll give you a link that you can send to potential investors to direct them to Microventures' website so the investors can read your particular deal. And if they're interested, there is an invest button on the site. They push the invest button, and a broker picks up the call and closes the deal. They escrow the money, they take their fee, and give you the difference. So there are many different platforms. Microventures is one. There's flash funders. There's probably about 30 different types of equity crowdfunding and funding platforms out there for beginning companies. And that's typically, Microventures and Flash Funder is typically used by startups that are pre-revenue, and it's a way for them to get their offering out there. Now, having said that, you have to keep in mind that just putting your offering up on Microventures, Flash Funders, or a funding platform is not going to get you capital just by sitting back and waiting, because the platforms cannot advertise and promote your specific offering. It's up to you to advertise, to market, do radio, do television, do conferences, email investors to direct them to your offering. An investor can't write a check if he's never heard of you, if he's never seen your offering. So again, the topic of today's show is, how do you find investors? And we've already talked about advertising and promotion. Now we're talking about funding platforms that you can upload your documents to. There's also a company out there called WealthForge. I've used WealthForge in the past, and they're not really for startup companies. They're more for seasoned companies with revenue, but they focus in on private placements under 506C and Reg A+. There's also a company out there called Capital Engine that we have a joint venture arrangement with Capital Engine, and it's another funding platform for cannabis, for oil and gas, for healthcare, for technology. Those types of business sectors, you can upload your documents. And again, you have to have your SEC documents prepared, your private placement, your subscription documents, everything like that, and then you can upload it to a platform. Now, why is the platform important? Because it's a way of attracting investors. It's a way of finding investors that are interested in your deal. There are other companies out there I've worked with. There's a company called Lincoln Park Capital out of Chicago. They do, if you're a publicly traded company and you're looking for capital, they do equity lines of credit. They also recently have do private companies also, as long as it's a very unique private company. It has revenue. Lincoln Park Capital is not necessarily an investor in startups. That's why at the top of the show I said you need to ask yourself and focus. Am I a startup with pre-revenue? Am I a seasoned company that has revenue? Because there are different investment groups for different types of companies. And you don't want to be unprofessional and just start helter-skelter sending emails out to people and say, will you write me a check for my deal? You really need to get warm introductions. And we're going to get into that in a minute about what to send to investors. There's a gentleman I'm going to have on the show in the next few weeks. His name is Phil Nadel. He has a company called Forefront Partners. They fund startups if you've got at least $3 million in revenue and you've got some traction under your company, you've got something out there that interests. Phil Nadel and Forefront Partners and his partner Barbara Corcoran from Shark Tank, they have a excellent program to fund companies. Now, all the companies, the investors that I've mentioned on the phone, Microventures, Flash Funder, Wealth Forge, Capital Engine, Lincoln Park Capital, Phil Nadel, Forefront Partners, Barbara Corcoran, Shark Tank. I have all this information available in a white paper, so you can send me an email, Mike Brette, B-R-E-T-T-E, @gmail.com. That's Mike Brette @gmail.com, and I can send you information on the investors we're talking about. Now, I've only mentioned, maybe a half a dozen. There are hundreds of other investors out there. You just need to look for them and be professional when you approach them and have your documents. Now, we're going to get into, all right, you've located investors. Again, please do not buy lists of investors. It's a waste of money. I know there are directories out there for venture capital companies. People are peddling those directories all the time. Say, we'll give you the name, the contact information, telephone number, everything you need to know. Look, venture capital is not for everybody. Venture capital firms receive 2,000 inquiries a year. They look at 2 deals and they fund 1 out of 2,000. And the one that they look at or one that they fund is usually from somebody they've done business with in the past. So if you haven't done business, or if your attorney, if your consultant, if your CPA hasn't done business with a certain venture capital firm, your chances of getting your deal looked at, let alone funded, is very slim. I know you read articles in the Wall Street Journal, you see it on TV, you see it on the Internet, about, so-and-so company just got $25 million from a venture capital firm. That's the exception to the rule. For most companies, you need to stay away from venture capital firms because they're not interested in funding your deal unless you meet very strict requirements, which one of them is they want to get 20 times their money back in less than 3 to 5 years and an exit strategy of going public. If that's not your game plan, you're wasting time buying a directory and trying to contact venture capital firms. Again, warm introductions are the best introduction you can do, whether it's for a angel investment group, whether it's for the investor groups that I mentioned here on the radio show. Cold calling does not work. Sending a cold email with your business plan or information does not work. I get them all the time, and I just throw them in the trash. If somebody says, hey, I heard you are an investment group and you like different deals, and they send me something that's completely not in my interest, my level of interest, I know they haven't done their research. They haven't found out what I'm interested in representing and how I'm engaged. You need to do that. Now, once you've done that, you've isolated the particular investor or investment groups you want, what do you send? Again, do not send a cold email. You need to find out what the investors are interested in placing their money in. And don't send some generic information out. Do not, and I repeat, do not send a 50-page business plan. I know you're probably proud of your business plan because you spent, $10,000, $15,000, $20,000 with some group that put your business plan together, a lot of color graphs and photographs and all the information. I've been in this business 25 years, and I can tell you from personal experience and also dealing with investment banks, angel investors, and investors of all types, investors, the people who write the checks, do not read 50-page business plans. They just don't read them. It's important to have a business plan for you, for the company, because it's a blueprint, but business plans do not get read by investors. Their advisors might read them. They send them to their attorneys. Maybe they send it to their CPA, somebody that vets their deals, and it kind of says to them, yeah, we think this is a good deal. You might want to have a meeting with the company. Then they're going to have a meeting with you. It might be a 10-minute meeting. It might be a phone call for 10 minutes. Don't think you're going to spend an hour and a half with any kind of investor, whether it's an angel investor, a VC firm, an equity fund. You're not going to get an hour and a half. You might get 10 to 15 minutes in a quick phone call or in a face-to-face meeting. Time is money in investments, and investors value their time as well as their money. So in any avenue that you're going to be trying to raise money, please do not waste your time with a 50-page business plan. So what do you need? You need a 2-page executive summary that has the following information: the description of your business, description of the management team that's going to execute the business, what's their background, what's their success story in the past. You're going to have to describe how much money, how much capital you're trying to raise. You're going to have to give a use of proceeds. Use of proceeds means what? It means how are you going to use the money? You're trying to raise $5 million. What's that money going to be used for? So you need to have a detailed breakdown of what it's going to be used for. And don't say we're trying to raise $5 million and then specify what it's going to be used and then have a category down there, miscellaneous contingent, $4.5 million. You don't want, investor looks at that, it's like, all right, they want $5 million. They have a specific purpose for $500,000. The other $4.5 million they want to put away for in case something happens. That's not what investors want to see. They want to see a detailed breakdown for the use of proceeds. And number one is important is competition. Do not, and I repeat, do not tell investors you don't have any competition. What that shows the investment group is you don't understand the market or there is no market. Because if somebody isn't already in that space, they're probably not going to want to write a check to have you get in that space where there's maybe no market. So again, what do you send to investors? A 2-page executive summary with a description of your business, description of your management team and their success story in the past, how they're going to execute. You need the amount of capital you're trying to raise, and the use of proceeds, and the competition. And I've already said, don't send a 50-page business plan. Don't send a pitch deck. I know you hear all the time, and I get them. I get pitch decks. Initially, it's not what an investor wants to see. They're not going to spend the time going through 25 or 50-page business plan or pitch deck. You got to get their attention with a 2-page executive summary, and then do some follow-up. Don't harass them. Don't burn any bridges. The first thing you're trying to do is you're trying to get a phone call with an investor and a possible meeting. Once you're in that meeting with them is when you distribute your business plan. But you don't read from the business plan. They already have your executive summary. They've already taken a phone call with you. They've already agreed to have a meeting with you. And again, don't walk into the meeting thinking you're going to have an hour and a half. You might have 15 to 20 minutes to present. You want to be very direct and concise with your information. In some cases, if you're dealing with investment banks, if you're dealing with placement agents are FINRA regulated like a broker-dealer. Placement agents have access to capital. They'll require a PPM, a private placement memorandum, if they're going to represent you to investment banks, family offices, other broker-dealers. So as part of the documentation process, you need a PPM. In the PPM will contain your business plan information along with financials, audited financials are the best. In some cases, they're not required. But if you have revenue, if you have cash flow, you definitely want to take the time and the expense to get a CPA to have certified audited financial statements. Broker-dealers, investment banks, family offices like to see audited financial statements by a credible CPA firm and auditor. You're listening to Business Pulse Talk Radio. I'm your host, Michael Brette. Business Pulse is the heartbeat of business. We're about business all the time. Today's show topic is how to find investors and what to send to them. This is, out of all the shows I've done, I think this is one of the most important episodes, and I hope you were taking some notes. If not, the investors that I've talked about on the show, I have in white paper, so if you want to contact me after the show by email, you can send me an email, Mike Brette, Brette, @gmail.com, and I will send you information on Microventures, Wealth Forge, Capital Engine, Lincoln Park Capital, Phil Nadeau, who's got a company called Forefront Partners with Barbara Corcoran from Shark Tank. They invest in startups. But again, if you're a true startup with no revenue, there's very little appetite out there for a true startup. There are some accelerator programs you can go to. There are some angel meetings. Those are, you got to pay a fee to get in, and you get about 2 minutes to make a presentation, and it's kind of like a cattle call, kind of an audition. If you want to, take the time and spend your money on something like that, you can. I don't recommend it, so especially with the Jobs Act, with the equity crowdfunding that's out there. With using platforms like Microventure and Wealth Forge, you really don't need to do the angel investment group meetings where you pay the fee to enter. Do your own equity crowdfunding and go out after your own investors using these platforms we discussed. That's what they're there for. But you have to have a marketing budget. There is no such thing as a free lunch. Nobody, and I mean nobody, works on success fees or a commission based on funding if they bring it in. It just doesn't happen in the real world. I know if you look on LinkedIn, if you look on all these different sites, everybody's saying, I won't pay any cash, I won't pay anything. Those are all losers. Those are people who will never get funded because they don't understand the process of raising capital. Investment banks always have an engagement fee, an expense fee, and they take points on the back end if and when they bring money in. Deals are always done on a best efforts basis. So again, at the top of the show, I said, figure out before you go out and try to contact investors, where are you in the life cycle of your business? True startup, pre-revenue, post-revenue, generating cash flow. Then you need to figure out which of the investors, like we talked about here, what platform you're going to use. The job of raising capital has been made much easier. I'm not saying everybody's going to be successful, but it's been made much easier now that companies are allowed to advertise and promote. I mean, you can take out billboards if you've got the money. You can be on Fox TV, which I have gotten clients on. I've got Tequila Commissarial. I've gotten them on the Fox Business TV show to talk about their company. I can do the same for you. Here on Business Pulse Radio, we interview clients all the time to give them exposure. We can do the same for you. There are many different ways out there that you can promote and advertise and market your business that weren't here 5 years ago. So today, in today's environment, it's a lot easier to get the word out about your company and your offering than it used to be, but still there are rules that you have to abide by. There are procedures, and we've talked about that on the show. I'm available if you want to call me at 951-236-8473 or email me, MikeBrette @gmail.com. This is what we do. We've been doing it for 25 years. We've raised millions of dollars and invested millions of dollars in companies. And let me tell you a story real quick before we have to leave. I had a company come to me many years ago. It was kind of one of my first deals that I completed. It was a bidet company. They made portable bidets for people who really didn't, have the space in their homes for a regular bidet, couldn't put the plumbing, the expense. This was something you could actually affix to your toilet. Now, I know it's laughable because, and believe me, I laughed when the gentleman presented me with this, and my staff at the time just kind of looked at me and like, why are you giving this guy the time of day? I'm telling you the story because investors do their homework, and I did my homework. After the gentleman pitched me on this particular bidet product, I kind of gave him the bum's rush out of my office, but then I thought about it. I started calling casinos in Las Vegas, nursing homes, veterans homes, and asking, I described the product, the portable bidet, the cost of less than $200 as opposed to thousands of dollars for regular, and I was told that by everybody I contacted, that this would be a great product. We ended up taking them on as a client, investing about $25,000, and ultimately helping them raise several million. We took the company public. We got the stock from 6 cents to over $3. $3 a share. It was a success. We got the product in J.C. Penney's medical catalog when they at the time when they were publishing catalogs. Now, the reason I tell that story is you're going to run into the same obstacles. You're going to find potential investors for your deal. You're going to maybe get a meeting. You're going to try to describe your product, and it's going to fall on deaf ears. They're just not going to be interested. That doesn't mean you failed. Once you leave on a good note, let them do their homework, and eventually you'll make enough presentations, you'll get out, you'll beat the bushes, you'll get introductions, you'll network, and you'll find the type of investors for your particular product. You've been listening to Business Pulse Talk Radio. I'm your host, Michael Brette. Business Pulse Radio is the heartbeat of business. We're here every Tuesday, 10 a.m. Pacific Time on OC Talk Radio. I want to welcome and thank you for tuning into the show today. We'll see you next week on the radio here on OC Talk Radio, Business Pulse. I'm going to have some of my past clients come on the show. Cellmedics, which is a company out of Las Vegas, has a transdermal cream delivery system that we've got patents for about 20 years ago. We've been an investor in this company for over 20 years. Other clients, Sensenetics, which is a Huntington Beach company that makes transducers. Transducers are anything from missiles to the scales that weigh product at grocery stores. I know that manufacturing may seem dull, but it's very, very unique product that Sensenetics has. Value Wizard is a company that does valuations for companies. We're an investor in that particular company called Value Wizard. I'm going to have my partner on to talk about that. And we're going to have Tequila Commissario back on. So we've got some exciting shows coming up. We're about how to do things and how to get things done, not just to pay lip service to the product or the service. Again, you've been listening to Business Pulse Talk Radio. We're going to sign off, and I'll see you next week on the radio.
You've been listening to another episode of Business Pulse Radio, right here in Orange County's only community radio station, OCTalkRadio.net.